Hello, this is Data Trader Pro with a nightly market update for April 21st, 2016. Yeah, we finally had some down movement on most of the market today. Biotechs were up. Earnings were generally poor after close, and we had a number of key stocks sell off. I think Google was down about 6%. Microsoft down a similar amount, Visa down, Starbucks down. Pretty much all the big guys that reported today were down and had earnings misses of various sizes. So fundamentals, people are telling you the fundamentals are great, buy. Well, they've probably been chasing this Momo move up and haven't been paying too much attention to some of the technicals, which were getting severely overbought. So, having said that, I left you a couple of days ago. I think was the last 2 days ago was the last wrap. Absolute breadth was pointing up, but it looked like it was ready to turn down. The stochastics were as high as they generally go, and of course we got our down move to the regression trend line. Let's have a look at what some of the indices are doing. Quite a bearish candle. It's still very high, but on the Dow, stochastics turning down. So I expect this move to continue. I'll tell you about some things in volatility and bond space that have me a little concerned for a sustained down move right away. But we're going with the idea that, and certainly block trades confirm that, we do have a local top. What seems like a local top, but we need to see some confirmation in other space. So, for now we're going to assume that Dow is going to head at least down towards the trend line, so 17,600, which is another 300 points down, which is a fairly couple of percent down on Dow. So we'll have to see how that pans out. The Nasdaq is actually look at the stochastics that turned down like 2-3 days ago, so that was a good clue in terms of topping. If you see here, where's my trend line again? So we got something like that, a series of lower highs. So some negative divergence there on Nasdaq, and of course we pointed down Russell. Russell popped above its trend line. There was a declining trend line going back quite a ways. It had popped back above. At least I think we're going to see a retest, which is a little bit lower. But, the daily stochastics have turned down, and that's usually a fairly bearish sign. So we'll have to see how that plays out. But I think, we'll probably end up testing some of these key moving averages, like at least the 20-day, something like that, which is down here, maybe 1110 or something like that. So another 20-30 points down. S&P 500 has back tested already. It's declining trend line, very similar picture to Russell, with also the stochastics turning down. Let's look at the advanced decline. Yeah, it sort of poked above this level. I believe this level was going back. That's probably not a great. It's probably there. Yeah, that's to be fair. Okay, so that makes sense. There was a prior resistance up here, hit a couple of times going back to even late 2014, early 2015. We tested that again, and we're turning down. Signature curl down on stochastics means it's rolling over. Whether it's rolling over for a reset move or rolling over for a bigger down move like these rollovers remains to be seen. But we've come a long way in a short period of time. You're talking about 2 months. The S&P 500's made almost 300 points, so very close to 300. Well, actually, probably 300 points. So that's a very big, that's a huge move in a short period of time. So, our thesis is that even if a longer case bullish scenario plays out, there are arguments for and against. I'm not going to get into a big political debate over where the market's going. I see a lot of problems with this market for sure. But bullish markets can go on longer than anyone thinks. But certainly after a move like that, you think you're probably going to retest somewhere in this zone. We pierced the upper daily Bollinger Band, and you have the 50-day moving average and the lower Bollinger Band in this zone. 2030. I would guess that that's going to get tested because that's a confluence of some fairly major technical areas. So we also to note the Nasdaq is below its 8-day moving average now. So let us move on to the. I think we can move on to the say. Actually, I want to very quickly move on to the bond space because this is some of the now bonds don't have to be inverse of indices. They aren't always. But when I see all terms of issues, the long bond, the 10-year, the 5-year, basically, all pointing down. Bonds should be strongly up if there's a sort of a risk-off move and a flight to safety. The bonds are a flight to quality move, and we're not really seeing that. Bonds have really tanked in the last 2 sessions, and we're not. We may be seeing a little bit of coming off lows, but it's not anything significant. The volatility space, yes, has bounced, but it's not a strong bounce, and we'll address that now by going to the site. Let's go actually straight to the volatility area. So we had a bounce today. Of concern, VIX expiry was yesterday at open. So we went from a severe contango. We pegged the meter. We were actually off the meter. We haven't been off this. We haven't been more than 20% contango since I believe back in early 2012. So we're talking about a 4-year contango extreme move here. So volatility was beat up and beat up and beat up. Made things like VXX and UVXY basically bleed to death. So they're coming off pretty extreme moves, but it's going to take a little while for this to resolve itself because you've got a new front month future, but you've still got 10% contango. So those products are still facing a headwind. Volatility, the VVIX index was neutral to negative today. So I use this to confirm moves in volatility. So when you see VXST, which is the 9-day VIX, VIX, which is 30-day implied volatility, VXV, which is 3-month implied volatility, they were all green today. Not as green as you'd like to see on a big down day because they were coming off fairly extreme lows, 12s for VXST, as we discussed in the video a couple of days ago. Also, basically 13 level on VIX, and we VXV didn't get quite that low, but I think it got into the 15s or very low 16s, which is 20s basically an implied volatility or the mean. So, but I like to use this to confirm, and this did not confirm the move up yet. We may just need to see a little bit more selling to, you have to realize that people aren't buying protection because there's a bunch of complacency out there. I mean, we had grinding up move after grinding up move, and this is it's just a normal pullback. It's not even an extreme pullback. I mean, look at the percentages. Okay, so we were down a little over 1% on the Nasdaq, but the other indices, less than 1% down. So there was no panic today, and most of the down moves were very, very, very slow. So, and you still have things like biotech's up, over 2% on a down day. So, yeah, I really think that contributed to the idea that this wasn't really a down move. This was maybe a needed correction, maybe even just the start of a needed correction and not all of the correction. But I think widespread, how bullish we've been, the strength of that 2-month 300-point SPX move has led people to think that there really isn't anything to worry about. Central banker after central banker, Fed member, ECB, Bank of Japan, IMF, Lagarde, everybody's, it's been a festival of central bank speakers for the last couple of weeks, and all they've been doing is, reassuring the market about how much they're in control, how ready they are to act, and so on. And I think, a lot of big trading firms have felt like, governments and Federal Reserve and other central banks have had their back, and they can play risk on a little bit. And we came off quite a severe low, and they want to make money, so they're pushing money into risk assets. So anyway, the point is that volatility doesn't show fear yet, and we don't see a lot of, in the block trade space, we see a lot of little trades, but we don't see too many. I mean, even that's just a million. We haven't seen, like, we see the big sells at the top, and we're still below these prints in VXX. So there's a few points of caution, just to say, until we get above these print levels, and until you see things like VVIX up 4 or 6% on the day. When you come off an extreme low on VXST, it can make a 30% up day, or at least a 20% up day. VIX can make anything more than a 10% up move, but we spend most of the day in the 4% range. So it's off extreme lows, but there's no panic going on in the market. People think this is probably another buying opportunity. That's what these indicators are telling me. We'll move over to breadth. Breadth was bearish, but not across the board. We had moments of bullishness earlier in the day, slightly bullish, and you look at the gray range is there for a reason. That's basically what I call a neutral range. So we spent almost the entire day in the neutral range. And, if you go back to the market map, you see the NYSE advanced decline, negative 1.7%. NASDAQ only negative 1.39%. Russell 2000 still very similar. NASDAQ combined. This is all the NASDAQ indices added up and averaged. Barely negative. The Dow more so, but the Dow had been leading. The Dow had made a fairly extreme up move. So to see selling of Dow stocks on a down day is fairly predictable. So you're seeing a situation where we started a down move. There's no panic. I guess that's the point I want to make here. So we're going to have to see something accelerate, some downside accelerate, some real selling piling on, and volatility to come up. And I'd also like to see the bond space react, and which it really hasn't. Trend day was a neutral range day, and you can see that played out for at least half the day. We got back negative. We started positive, then we dipped, of course, with the market, and they rallied back. I think ES futures went to about 2097 or so on a pullback, and then we started falling from there. But you can see that most of the afternoon stayed, it was down, but it was fairly flat, and we didn't accelerate down until right at the end of the day. And so the deepest of the red today was from 2 p.m. onwards, so only in the last 2 hours of the day. Our version of the McClellan oscillator, the MCC DTP MCC, agreed with the dollar-weighted buying pressure down, but only later in the day, say 1:30 and on. It was a neutral range day up until mid-afternoon. Net issues were down. Net volume was down, but it didn't trend down like it does on a trend day, and didn't get to extremes. You see a high here is 500,000. The low here is 200,000. So we weren't really, it wasn't a panic sell-off. 0.7%, 0.8% down in the indexes is a good pullback on a single day. But I'd really like to see follow through in order to feel like we can reach that sort of maybe 100 points down. We're basically 30 points down, and 30 points out of 300. So a bigger correction? Maybe. I'd like to see it because I think it's healthy for the market when the market corrects. Constant grinding up moves, from institutional money just panic buying for whatever reason because they want to see returns. They haven't seen returns in several quarters, so they all want to make money. So somebody keeps buying and buying and buying, but earnings are crap. Sorry to say, but earnings are crap. Fundamentals are crap. The world, things aren't getting rosier out there. I think most people with any sense of things understand that. So. They're buying because they want to make money. I think that's about it. Let's go to block trades, index ETFs. Okay, so this is where this looks like a nice confirmed down move because you see at least we have resistance to work with. We have some nice block trade structure to work with here, especially on SPY. So you've got a big, what probably turns out to be a sell. Here we made a nominal high above that, less than $1 up, about 80 cents higher than that, and then there was more activity here, and then all the late sell prints came in. So we didn't really have anything real time. It was 4 p.m. at close yesterday, but not during the day today. So any slight move up early in the morning was sold off. This was pre-market, and then we saw the late prints come in, and we saw them fairly early. They didn't delay them too long. I mean, it came in from a little after 10 o'clock. So you could see that when price came back up to the print levels, it was rejected. You see that? It was rejected perfectly and trended down. You could have taken a short anywhere in this area, and I think we closed about $1.50 lower than that, something like that. So so it was a good day to short. The nice thing about this is we have a very clear line, at 210, 210.03, 210.04, matches up roughly with this area, matches up roughly. This is a high 209, so 209.91. We just could basically draw a line through this and just say that this is resistance. We are going to be bearish below it, but where are we going to be bearish below it to? We'll go to the longer term chart. We'll have a little bit of a better picture here. Okay, so this is our, we came down here. These are the same trades. It's just on a longer term chart. This gives you a week view as default. We've added dates. If we scroll back, this will be a 6-month chart. It's back. It's slowly just filling up with data. I think it's about 2.5 months worth of data now. So you can see the big prints up here. That's your line of demarcation. The next line where you had a lot of late prints, and these were buys. So we'll see if support comes in. 207.85, something like that. Below that, you can see these guys and these guys roughly 205.98, 206.40. Yeah, so and then all the way down at 203.94, so 204 area. So basically, these are our levels. Draw a line through that. Is that going to be support? Maybe. If it breaks that, go back down 205.94. That's an area. And if we don't find support there, we're going to, should this move really accelerate, then we're talking about lower than here. But 204 roughly corresponds with where I pointed out on the SPX chart, which is your 50-day moving average, lower Bollinger Band. There's going to be a fair bit of support here if we get there on this move. If not, if we find support here, we're going to go back up. We're going to retest this level, most likely. So let's go back to the I lost my place here because I clicked off. Okay, so SPY, QQQ is more, you could see the sell prints. This was the erroneous print. I should really go into the database and pull that out. But this was your sell level, 111.20. We've been below that for 2 days. big line. You could draw just a big band through this area and just say that's your resistance. You know, the upper end are these prints, low 111s. You had even more prints down here, 110.60s roughly, and then we're below that. So the area that it's likely going to test, 108.60, right? These big prints down below. So we draw a line through here. That's your target, right? So you still have a tradable move to go down there. If you don't make a move down there, go back up. This is your level to test. Obviously, the highs from yesterday or so. Yeah, look a little clearer. IWM. Very similar. Lots of trade activity up here. Mid 113s, 113.63. Yeah, some late prints from probably pre-market or late yesterday. Late prints came in 113.60s. That's going to be your retest level. On the downside, we have a nice series of prints here, 109.95. Okay, I think that's it for tonight. We will see you in the next day or two when there's something interesting to report in the market, and thanks for joining us. Take care.